My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Bounce! Oh my, and a big one after a brutal decline. It seems that once the sellers ran out of ammo, no more stock left to sell, the buyers ran right back in. Buy! Dow surging 440 points, S&P pole vaulting 2.01%, NASDAQ soaring 2.71%.
House of pleasure.
So how do we explain this incredible rebound, even as the averages did give up some of their gains in the last half hour of trading? It's easy enough to argue that things are simply better than we think, and that's definitely a part of it, but not the whole thing. It doesn't explain the broad base of this rally. We had a dramatic decline in tech late last week and yesterday. Those same tech stocks roared higher today. No surprise there. Last night I told you these sell-offs tend to last 3 days, and then tech bounces back. That's exactly what happened. What shocked me, though, was the incredible buying in the industrials, the retailers, and the railroads, the last being really surprising.
All aboard!
In other words, we had a rally in both the COVID stocks and the recovery stocks. When nearly everything goes up, you'll hear people claim, oh, well, then therefore it's the Fed, or people betting on a stimulus package, or mindless dip buyers. I think those explanations miss the mark. How do we figure out the real driver of this move? First, let's go over what we know for sure. There's a semiconductor company. You may not know it. I think it's important. I often joke that it sounds like Qorvo. Its name is Qorvo. Qorvo, with a ton of exposure to Wi-Fi, the Internet of Things, and smartphones, especially 5G. Now, last night, in a quiet moment that people weren't thinking about, Qorvo pre-announced some absurdly better than expected numbers, and their product portfolio is so broad that it caused a ton of positive pin action. Strike! What comes to mind? Well, think the other cell phone chip makers that have been the leaders of this market. I'm talking about Skyworks Solutions, NXP, Near Field Communications. How about Qualcomm? We know them as the king of cell phones. Think about the industrial chip makers. And there you got Texas Instruments and Analog Devices on recently telling a good story. You can even extrapolate to Cramer faves, AMD and NVIDIA. The latter is always in the conversation, and it's not because it's just a dog. Those are the two most important semiconductor companies in this entire market, if you ask me. Not to mention Broadcom. Now, Broadcom, AVGO, they had the misfortune of reporting when I wasn't around. And what a fantastic quarter they had. Now, same goes for Marvell, another one of my favorites. These are all action alerts names. That's a 5G play, just like Qorvo. And that delivered a huge quarter that also fell through the cracks during the sell-off. I wasn't here. I was busy in the tomato plants. Doing the tomato plants. What can I do? Got locked out of the house because I spent too much time with the tomato plants. Now, the pin action doesn't stop here. You also got to consider the end markets. If Qorvo's moving lots of chips, well, then can't we just presume that cell phones around the world must be in good shape? In the last few days, bearish analysts have mauled Apple. They've been all over it with their cells, and it's not as good as it used to be, and all that nonsense. Well, guess what? Wait till you wake up tomorrow, and you will see so many people bulling Apple because Qorvo gave it a reason to rebound. What else do we know? Okay, two analysts made a stand telling you to buy the stock of Adobe before it reports next week. Now, one analyst says something good. Two analysts pounding the table just days before the quarter. I call that a green light. Adobe's all about digitization, which means there's plenty of pin action here, too. If you think they're going to have a good quarter, then you can buy ServiceNow, you can buy Salesforce. How about Wix? How about Shopify? Third thing we know, Morgan Stanley published a very enlightening piece about Microsoft titled Solid Returns in Times of Uncertainty. It was a big call where they predict the potential dividend boost in the next week or two. Now, normally no one would get dividend boost. I mean, but wait a second. We're not in a normal time. We're getting dividend suspensions left and right. So a possible dividend hike from one of the largest companies on earth is very reassuring. Makes you feel like maybe some of these tech stocks might not be all too expensive. Put it all together, and we had a very good reason for a huge swath of tech to rally. And at that point, it takes up the whole sector, a sector now big enough to take up, yes, the whole market. people start circling back to the ones that reported tremendous quarters that had just kind of, people said, something must be wrong because the stocks went down. But there wasn't. I'm talking about things like Zoom and CrowdStrike. This morning, I had a conversation with David Faber on Squawk on the Street. I said, Zoom stock's down 30%. Now, that's something I could buy. There's a little laughter back and forth, but boom, Zoom rallies 38 points. Simply too big a discount for a company that's taken the stay-at-home economy by storm. As for CrowdStrike, we just had them on last night, and their cybersecurity business is on fire because remote work makes businesses much easier to hack. They are the 1 and 2 biggest beats of the entire year so far. Speaking of last night's show, we also heard from Ned Siegel. He's the CFO of Twitter. I don't know why people didn't pay attention to it. He said that business has held up during the month of August. The numbers of users has exploded. Good news for Twitter. Also good news for the rest of the industry, like Facebook, Snap, Pinterest. If all of those catalysts weren't enough, the final nail in the coffin of the bears came from the front page of the New York Times business section, which published a story headline, Tech Stocks Lead Nosedive, which postulated that maybe these big-name tech stocks had run up too far too fast, making them dangerous to own. When you see a sell-off on a prominent part of the Times, a big story like that, that tells you, frankly, it's a little counterintuitive, but maybe the move has run its course. You don't need the paper of record telling you these names are dangerous after they've just experienced their fastest 10% decline in history. In the end, I think the tech sellers just exhausted themselves. After the last 3 sessions, they did indeed have, it seemed like, not enough stock left to sell. That allowed the buyers to take over without too much fear. The tech rally is easy to get your head around. But this wasn't just a tech rally, which is what flummoxed me. We also had fabulous moves in the industrials and the retailers. I couldn't find a soul who could explain to me why Caterpillar soared to a new high today. Not a soul. Cat's more levered to energy, which is doing badly, than China, and energy is lagging. Beats me. Maybe an upgrade tomorrow? The rails were insane today. Why? Well, we got a note from a research firm arguing that FedEx could beat the numbers. We're seeing some real strength in China, which fuels lots of intermodal traffic. Mainly, though, I think the market was predicting a positive catalyst for the rails, and that's what we got after the close, when we learned that Kansas City Southern had shot down a $20 billion takeover bid from a group of private equity firms. How about Home Depot, Lowe's, Walmart, Costco, Target? Look, I can grasp at stores. California is a huge state for retailers. COVID cases seem to be plummeting back to many months ago level, even as a huge chunk of the state is literally on fire. Interest rates remain low. I could do that. DR Horton, some good news there. But maybe these high-quality retailers just had a great Labor Day weekend, and we don't know it yet. Clearly, the market's anticipating something real here because RH, company formerly known as Restoration Hardware, just reported a blowout of all blowouts. We will talk to that company's CEO, Gary Friedman, on tomorrow's Mad Money. The stock is soaring after the close. Honestly, it is frustrating after so many years of being in this business to see many winners without being able to pin down exactly what's driving them. We have plenty of people betting big the economy's making a comeback. They were in there buying. But we all have just as many people who think that COVID's making a comeback. They were in there buying, too. The main takeaway here is that the S&P 500 got hit with a tremendous amount of selling over the previous 3 days, and whoever was doing that selling stopped. Maybe we're dealing with a scared hedge fund. Boy, there are tons of those. How about a firm that was margined to the Hilton and imploded? Once the selling stopped, the buyers did what they've been doing for months. Sometimes the only legitimate explanation for what's happening is that there's no more stock to go. You can't pin the tail on every donkey. Often it comes to sellers just being exhausted, or big money managers who need to lock in gains, or maybe one big buyer getting cashiered. Perhaps SoftBank, which is rumored to have purchased $4 to $5 billion in call options. Once that ill-advised bet was unwound, the selling pressure vanished. Maybe it doesn't matter, though. Here's the bottom line. Tomorrow, I expect the Apple bulls to resurface, the Zoom acolytes to speak up, the semiconductor analysts to raise numbers across the board thanks to Qorvo, the restoration hardware now RH people boost numbers too, and the KSU chatter, bingo! Sooner or later, we'll figure out what's driving the retailers and the railroads. I think it's what I just said. We might even get an explanation for the puzzling run in Caterpillar. Until then, though, we don't really know what this rebound's made of or if it's got staying power. Good to see that my 3-day sell-off and buy thesis worked again. Now let's just see what awaits us.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.